downtrend. So the market came back down and the market found support at this higher low point. We have a higher high, we have a higher low. This bottom floor, this is my level of support. As you guys can see, I got rejected from my level of resistance and I came back down to find support and I was also rejected. So we're going to just go into details on just market structure right now. I'm not going to say too much about entries. So as you guys can see, we got our push up. Say we took entry right here, for instance. Boom. We want to buy low and we want to sell high. So I'm buying as low as possible in order for me to form a new higher high. When trading in the foreign exchange market, you know, you get higher lows, and the reason we're buying at higher lows is simply because we want to get a push up in order to form a new higher high. So the market forms higher highs and higher lows in a uptrend. So as you guys can see, we got a break of this key level of resistance, which was first rejected to my left. And when trading on the charts, always look to your left because the market always leaves mysteries. The market always leaves clues. So I got a break and the market came back down to come retest. So this resistance, it got turned into a level of support. So it came back to retest this previous resistance. Now this is my level of support. So I'm at another higher low point. And this is another higher low point because this higher low is higher than this higher low. So we got a high, we got a new higher high and a new higher low. So my previous higher low is down here. This is my previous higher low. I have a new higher low. So now we're trying to take entry again. Boom. We're trying to form another higher high. So boom, we come up, got a new higher high. As you can see, we have found a new level of resistance. Just doing basic market structure, basic support and resistance, the market found another level of resistance. And as you can see, the market was rejected from this level of resistance. And when I'm saying it's rejected, the price couldn't push up at this time. The price couldn't break through and then do a retest and continue. It had to form a new higher low to get momentum from the downside to get a new push for a new higher high. And as you can see, we form higher highs, higher lows. At this higher high point, we got a new higher low formed. So at this higher low, this is basically we found a level of support right here. Support was found right here. At this point where the market stopped at, support was found. And it wasn't a major level of support simply because, you know, my major level of support is down here where my first higher low was formed at. But this is structure. We're in structure right now. So, you know, if you get a higher low broken in structure, as you guys can see, we got to push down. The market broke past this higher low. Structure is broken. So continuing, we formed a new higher low, but the market didn't have enough momentum to push up to the upside and form a new higher high. So the market ended up coming to form a new high. This isn't a new higher high. This is a new high. So I put an H because that's a new high. So, you know, when y'all are studying, doing y'all candle patterns, as you can see, this is a double top. The market was rejected from a level of resistance 2 times. So we got a double top. And, you know, we're not going to just sell up here because we got rejection. We need confirmation on why we're going to sell the market. So, you know, until we got this break of structure right here, we're still looking for buys, but we need confirmation in the market in order to take another buy. Don't enter the market unless you have confirmations. So we got a break of structure, a new higher, this higher low was broken. So we have a new lower low. Remember I mentioned at the beginning of the training, in a downtrend, we form lower lows and lower highs. So once you get this break of this higher low point, you don't automatically sell. You don't sell once you get a break. You always have to wait on a retest because you want to buy high and you want to sell low. So for example, if I sell the market while it's dropping, if I sell right here and I'm selling, okay, y'all going to profit, but then you're like, damn, the market found some level of support. Always look to your left. You could go like this, boom. Say that's not even, but y'all see where I'm coming from. This was the previous level of resistance right here. So the market ended up finding support at this point where it formed our new lower low. I got a rejection of this level of support simply because looking to my left, I see, okay, that was the previous level of resistance where the market respected. And I said respected this point because I got a new higher high form and then I got a higher low. And that's where we took our entry at. We got to push up. Now we're looking for sales because structure was broken. This higher low point right here, it was broken. So whenever you guys are on the charts, the market moves the exact same when y'all are on these candle patterns. When y'all are on these candlesticks, the Japanese candlesticks, they tell the exact same story from this line chart. So I have a new high, a lower high point, and as you can see, that lower high point is now at a level of resistance, but it was previously a level of support. We got a break, and now we're taking a sell. Boom. We're selling at our first lower high point, and we'll be using our Fibonacci retracement, but I'll get into details with that. But right now, we're just going over straight market structure. So at this lower high point, all I'm looking for now is a new low. So only reason I'm selling up high is because I want to form a new lower low. Just like when we're buying at this higher low point down here, we want to form a new high. We want to form a new higher high. So when I'm selling to at this lower high point, I want to get a new low, a new lower low point. So boom, as you can see, the market pushed down at this level of support. It's support now, but look to my left, it was previously a level of resistance. So at this lower low point, I never, ever take entries in the middle of the trend. Like if the market has already, already broke past the lower low, don't try and be the person where you want to take entries right here. Okay, yeah, you're going to profit, but you're in drawdown, because you don't know how far the market is going to push back up. The market could push back up all the way up here. So what we're paying attention to is strictly lower high points. If you miss an entry, don't rush an entry. If you miss a entry, do not rush a entry. Don't force an entry. Let the market come to you. So where I have circled off is, I'm at my new lower high points. And like Ghost just said, take notes. And the reason he said take notes, hold on. The reason he's saying take notes is because how we're explaining it is exactly how the market moves. So at this lower high point, I'm trying to find, a new low. I'm trying to get a new lower low. But, y'all have to understand the Japanese candlestick patterns in order for you to take a setup. So I might not have a position where I can take a sell right here. The market might not tell me that, but I know I found resistance and I'm in overall downtrend. So I might come back down and form a new low. And I'm saying this is a low because my lower low, this is just another low point that it came down to, but it never broke this lower low to say, okay, that's a new lower low. No, this is just a low point. This right here, this is a high point, and I'm saying it's a high point simply because at my lower high, only reason I'm saying lower because we're in a downtrend. We're going lower lows and lower highs. Only reason I'm putting this high point right here because the market came back to test this previous lower high. So this is just a high point. So don't get it confused when I'm saying the H and the L. That's just a high and low point of the market at that current time. So I might get a candle reverse pattern at this high point that I didn't get at this lower high point to take an entry in order for me to form a new lower low. So I have my new lower low and I'm paying attention to details, paying attention to what the market is doing. I understand that I have a break of support, which is a major key level because looking to my left, it was a resistance right here and it was support right here. So me getting a break of this level of support right here, that's major. So what I'm looking for now is try to get a push to this next level. Because I always pay attention to, with your support and resistance levels, because those are going to be your take profit zones. Those are going to be the areas where the market gives off exhaustion. Those are going to be levels that you want to pay attention to at all times. So me seeing, okay, I have a new lower low right here, but I already took entry at this high point. My projection, I want to get down to this point at least, minimum to right here. And I'm going to set my stop loss right here because remember, like I said, guys, if I get a break of structure If I get a break past this lower high point right here, I have to get a retest in order for me to take the market up. But anytime you get a break of structure, guys, you know, you get a break of the lower high point, automatically change your bias of where the market is going. Never get stuck in one bias. So with me, I have a new lower low. We're paying attention. I have the market come back to retest that previous level of support. Now it's turned resistance. So now I'm at a lower high point. I might not have gotten a candle reverse pattern right here, but I know the market ended up dropping and I end up getting a new lower low. Cool. Sometimes you'll miss entries. Say, for instance, we missed this entry right here. Cool. But pay attention to what the market is telling you. The market tells you a story. So right here, boom, I got a new high point. And at this high point might be the point to where it gave me that candle reverse pattern right here. And look, as soon as I took entry right here at this lower high point, remember I said sell high, buy low. I'm selling high so I can get a new lower low. Price push down to form my new lower low. Boom. I got a new lower low, and I hit profits. I hit my take profit, so I'm getting out. So continuing, you know, now your take profit is hit, but never be the person you say, oh, just because my take profit got hit, I'm getting out the market. Pay attention to details. Pay attention to what the market is telling you. So the market wasn't ready to form a new lower high point, probably at this level of, you know, previous level of support. We got a break. This was my level of support. We got a break of this previous level support. It turned resistance. We got a break. The market came back to test this level of resistance where I had my lower high, my high, and now the market has formed another high point simply because the market cannot break this level of resistance. The market can't break that point. So I'm at a new high point, and I still have my overall bias of that I'm in a seller's market. Seller's market. Always know before anything where you're at in the market, because if you don't know where you're at in the market, how do you plan on taking any type of setup? Don't be that person to where you think, okay, you saying, okay, well, I think the market is going to automatically shoot up right here. You wouldn't have known if the market was going to shoot up right here unless you had confirmation that the market found a level of support or resistance. You know what I'm saying? The market could have easily dropped down to continue. Always pay attention to where you're at in the market. So at this new high point, say for instance, I end up getting another entry setup, and I could have took it right back down to the downside again. But I know what I'm looking for is another low to be found. So we end up getting a new lower low right here. And as you can see, the market came back and retested that previous level of support where the market found support at right here. And now it's the level of resistance, and we're getting the continuation of that downtrend. So now the main thing to do is ask questions. What questions do you guys have for those who are beginners? And let's get it. What's the questions? If anybody have any questions, and Ghost, I'm gonna hand it over to you, and you know, let you break it down and tell them basically how the market actually moves and etc.
All right, so exactly how he has that on the screen. Make sure everyone has that in their notes or has that in their head, and make sure you understand that. So if you don't understand what he just broke down, you can ask any questions. You could unmute your mic or you can type in the chat box. Other than that, I'm gonna write over here to the side. I'm gonna write structure because that's what he just showed you. Hold on, I'm not gonna write that. I'm gonna type. All right, I'm gonna write structure. So that's one, and then two was support resistance. If you just seen how support is a roof and a floor. Support resistance. All right. Next would be a trend line, and I'm gonna just show you guys this right here. A trend line is point one, run it through, and then you'll see like if I go from here, point one, point two, run it through. It maintained this uptrend before it turns to this downtrend. And then if I go from this downtrend, point one, hold on.
Quan, can you mute your mic?
21 running through.
Oh, okay, yeah, I will.
And maintain this downtrend structure, and like how it came up to here, these could be like tested candles, testing this trend line, until it actually breaks, then you would know off the break and retest. This is how it broke and retested this downtrend, and it goes along with structure.
So what I have to throw in with that, drawing trend lines is basically another confirmation. So don't just depend everything off of your trend line. As you can see, with following market structure, we seen a break of that trend line, but we didn't have a break of resistance. We didn't have a break market structure. So we were still looking for sales. So don't automatically assume just because you guys draw a trend line and it breaks that trend line, pay attention to structure. Know where you're at in structure. And that's the main thing I'm going to preach throughout this whole webinar. Structure.
For instance, like you said, right here, market would have broke these trend lines or seemed to have broke these trend lines, but until the market has broke this high point, until the market has broke and retested this high point, it's still a downtrend. Until the market has broke this high point and retested, it's still a downtrend. Anthony, how many times is an average amount of times is test a support or resistance? All right, so there's no specific amount of time price can test the support resistance. Is that what you're asking?
Yeah.
Yeah, like there's no specific amount.
And using support and resistance, I've drawn support and resistance from my weekly time frame, and it hasn't been broken since last year. So the market doesn't have an average time of how many times the market touches it, but always pay attention to when you're on those candlestick patterns. We're on a line chart. When you're on those candlestick patterns and they're showing those long exhaustion wicks, that shows buyers or sellers rejection.
Okay.
All right, so I have structure, support, resistance, trend lines. All right, can you clear your writing off the screen, Jeremiah? And what I'm writing here are just like confirmations that you would want to go by if you're in a buyer or seller's market.
You said do what? My bad, I didn't hear you, bro.
Can you clear the black writing off the screen right now? And like, make sure y'all got that structure: higher highs, higher lows. Higher highs and higher lows is an uptrend, and lower highs and lower lows is a downtrend. What Jeremiah just explained. So with structure, support, resistance, that he also explained going along with structure, and trend lines that he explained going along with structure. Notice the structure is the main thing. That's like where you could add Fibonacci retracement. So at structure, going from point A to point B, at structure, at these higher highs or higher lows, is a retracement from each time it's a higher high, higher low. It's a retracement going along with structure. So for instance, hold on one sec. All right, so going along with structure, this will be Fibonacci. All right, is there anything you want to say about fibs, Jeremiah? Like, you could use the screen, the layout I have on my screen to teach it. I don't think Jeremiah bought a computer. But anyway, so Fibonacci, this would be point A. This would be point B. All right. So when you're pulling Fibonacci in the uptrend, you're pulling it from point A to point B, from the low point to the high point. So when you pull out your Fibonacci tool, you're pulling it in this direction from point A to point B, and you're waiting on a retrace in the market. It could be 23.6, 38.2, 50%, 61.8, 78.6, 88.6, or 100, which is like a full retrace from point A. And that all maintains structure in that uptrend structure. And when this 100% is broken, that's how you know, all right, I'm in the wrong direction and it's going the opposite way. Does anybody understand that and or have questions for me to break it down clear to you?
Did I understand how to use a fib?
All right.
But hold on. So you said in the uptrend, you put the 100 at the bottom and the 0 at the top. And then on the downtrend, put the 100 at the top and the 0 at the bottom.
Yeah, so in an uptrend,
Right, cool.
you're going from low to high, and then your retracement is on that higher low. Low to high, your retracement to higher low. Downtrend is high to low, and your retracement is on the higher low, and you're entering off the retracement to buy or entering off the retracement to sell.
Yeah, and it should bounce off the, most likely the 15618, correct?
Repeat that.
I said, and most likely when like when it's trending and it's retracing, it's most likely gonna bounce off the 50 and the 618. Isn't that
No,
correct?
it don't. It's not a most likely. It's not a most likely. You're going off what you see. So that's why, like, you have the 23.6, the 38.2, and like, so if it bounces off a 23.6, this is considered consolidation continuation, meaning it can consolidate at the 23.6 and then take off, or it could make a full retracement down to like the 30.2 or something, off like.
All right. I get what you're saying.
All right, and if it say it hits like a 38.2, when you get a 38.2 retracement, that's like a higher high, a perfect higher low. When you get that extra confirmation, you most likely will get a quick push up,
Yep, that's what I understood that part.
And
Like,
then say you get a 61.8 or 78.6 or 88.6, the market could form like higher highs, higher lows to the upside, still maintaining that structure. You understand?
But it's gonna be going up slower.
It'll be like a slow push.
Yeah.
Slower push,
I
but
get what you're saying.
it'll push.
It's gonna be more of a slower uptrend and stuff.
Yeah.
All right. Shoot, because I've been trying to, like, I understood all of that, but I've just been trying to get like confirmation on everything about the Fed, because I use the Fed a lot, but I still, like, I'm always gonna ask whenever I see somebody using the Fed. I'm always gonna ask the same question just for like confirmation, because I'm trying to get A1 at this trade and stuff.
Yeah, for sure. So Jeremiah, you got anything you want to say about fibs?
Jeremiah went to sleep on us.
All right, so y'all got any questions about anything? Like, this webinar is gonna end in like 5 minutes.
I don't have anything right now. I'll message you if I come up with something. I'm gonna go back through that and out you. Yeah.
For sure. Um, net like deeper things would be like, for instance, say we have an uptrend going, and then we have the market structure we went over. We have a support level here. We have a Fibonacci here. Say we have a 38.2 here. And then we get a bullish engulfing, which will be candlesticks, which will be like deeper into training. Say we get this bullish engulfing. The bullish engulfing is on this retracement right here. On the lower time frame, it was a downtrend.
Let's jump to the charts. Let's jump to the charts to be able to show it clearly on the charts.
Yeah, for sure, for sure. This webinar finna end in like 5 minutes.
True. Somebody just said, could y'all look at EU? I think in the group chat. Yeah, somebody said, could y'all look at EU? Could y'all break down EU on the 4-hour time frame?
All right, so with EU, like I just preached to you guys. If I go off market structure, we had, all right, a lower high, a lower low, a lower high at this resistance level. Then we had a lower low and a lower high at this resistance level. This green line that I have marked, maintaining this downtrend. So right here at this downtrend, we had the resistance level with the lower high, with the touch of these two, with the confluence with my red over blue EMSMA, which I had a bearish engulfing here. And then I had this wick, which if I drop to a lower time frame here, let me clear out this out. So basically, what I just showed you guys with that market is we're in a downtrend structure, and I'm gonna have to send another link after this link. So I'm gonna highlight this bearish engulfing at this resistance level right here with a highlighter, and I'm gonna highlight this whole area. I'm gonna drop to the 1 hour, and I'm gonna go to that highlighted area. So boom, this was a bearish variation right here. Engulfing right here with the bearish variation at the high point, like I said, in the high point at their resistance level. All right, so like I said, we had a bearish engulfing on the low